Hi everyone, welcome to another episode of the Mizuho Week Ahead. I am Ziyi, market economist at Mizuho Bank. The theme for the upcoming week is swinging sentiments and concerns. Sentiment swung wildly last week as China's return faltered as equities sank over NDRC's disappointment. Markets were again disappointed over the weekend at the Ministry of Finance briefing on Saturday, given the lack of details on the size of stimulus and execution plan, especially as dismal CPI and PPI prints signaled deflationary pressures and soft underlying demand. Looking ahead, focus will turn to any stimulus measures or details from the State Council this Tuesday and the Standing Committee in late October. Regardless, further equity rally would likely be more discerning towards details of the stimulus. Over in the US last week, cautious FOMC minutes and hot US CPI also dented markets' hopes for sharp easing in November, and dollar bears were disappointed yet again. In EM Asia, the mood was tentative as well, with the CNH outperformance unable to lift any regional peers against the tide of a stronger greenback. Aided by announcements of FTSE WGBI inclusion, Korean won was later changed with further support by the Bank of Korea, who enacted a hawkish cut of 25 basis points. November cut appears ruled out as house prices remain a concern, even as household debt showed signs of slowing, FX risks have eased, and inflation looking to be managed. Meanwhile, RBI had a rather dovish hold as they changed its policy stance to neutral, setting the stage for easing as food inflation looks to ease and core inflation broadly contained. This morning, MAS kept policy stance unchanged as expected and stated that monetary policy settings are for now still consistent with medium-term price stability. The addition of quote for now unquote and omission of monetary policy quote keeping a restraining effect on imported inflation as well as domestic cost pressures unquote from the previous statements adds a dovish note, in addition to an explicit allusion to more balanced inflation outlook. This week, we have quite a heavy central bank calendar. We have Bank Indonesia, BSP, and Bank of Thailand on Wednesday and ECB on Thursday. ECB speakers correlating around a 25 basis points cut sets expectations for further easing amid growth risks, even if there remains some upside risk to inflation. Amid the return of rupiah stability concerns, Bank Indonesia is expected to stand pat, while Bank of Thailand looks to be on a dovish hold amid increasing credit risks. BSP is expected to cut, and we see a material chance of a jumbo cut with inflation undershooting BSP's target band and lack of improvement to domestic consumption indicators. On Friday, we have Malaysia's Q3 GDP and 2025 budget. Malaysia Q3 GDP should moderate on high base effects, but will be a sequential expansion with manufacturing and services as key drivers. Resilient growth could set the stage for bold budget measures, with details of fuel subsidy rationalization and possibility of tax reforms expected. All in, while directional cues of policy trajectory may be evident, the path for EM Asia central banks may be bumpy on idiosyncratic domestic risks and a king dollar refusing to abdicate. With that, we have come to the end of this episode. For more information on the key events for the upcoming week, please refer to our Week Ahead publication or contact your respective sales desk and RMs. And for regular notifications on our market views, please subscribe to our channel and hit the notification button. Thank you and bye-bye.